What is a full-time trader, guys? Doesn't have to work outside of that source. So using trading as a full-time income and doesn't have to work outside of trading to derive that income. That's a perfect example, isn't it? Often people say to me, I go, what's a full-time trader? And they go, somebody trading full-time. But the time bit is the bit in that question, isn't it? What is a full-time trader? But really a full-time trader is just somebody who derives their income from the market.
Positive, especially this weekend of the Art of Trading. Really concreted and solidly made me feel like I have made the right decision, and has made me very excited about the future. Because I had no experience in the trade market, I still didn't know whether they were just another black suit trying to take my money, until this weekend concretely confirmed everything. And it was so amazing to see that they really are a family and they really are a tight-knit community.
My experience was very rewarding. The staff, I think, are so dedicated that it's a great atmosphere that you want to be around.
And we were talking about that risk and reward and how important that is, and what's my whole strategy for risk management, and if I'm having different portfolios, is my risk management strategy going to be different?
John Gow was unemployed. Started investing in shares through Wealth Within, a guide to help do-it-yourself investors make some smart decisions.
With trading, it's not about being in the market all the time. It's about just being in the market when it's the right time, because the share market, you can just trade with your laptop. I'm not being told what I can and can't do by a boss.
What your goal is what you can see in the future, isn't it? Yeah? Right now you don't know here. And it's like sailing a boat. If you go out sailing the boat, you can see the horizon, but then when you get there you see another horizon. So as you're walking the journey from where you are to where you want to be, the more you can see and the more you can perceive that you can do and the more you can perceive that you can achieve, yeah?
Joining us this morning on Studio 10 is financial expert Dale Gillham. Hi, Dale. Hello. Finance expert Dale Gillham from Wealth Within. It's nice to see you again.
It's amazing listening to a professional trader who's doing what you're aspiring to do and hearing it firsthand.
Too many people ring me up and say, hey Dale, I want to make quick money, but it's not about getting rich quick. I think we can go for about 4 hours, but I'm not sure my wife would like that. So
I'd say congratulations for putting your time and effort out there, because you probably don't really have to do it. You're successful traders in your own right.
Thank you very much for opening up my mind with trading.
So of course you can succeed, of course you can, and you're the only one holding yourself back or succeeding, and that feels very empowering actually.
A quick reminder before the show starts that this live stream is an educational tool, and as such your personal circumstances have not been considered. We hope you enjoyed this week's show.
Good evening and welcome to Wealth Within Live, the Australian stock market show where you get to ask the questions and we give you the answers about all things investing and trading. Now tonight we're going to share with you our thoughts about investing for dividends or investing in high dividend yielding stocks and whether this is actually a good strategy or not. And as always, we will look at what's happening on the stock market, give you our thoughts, answer your most burning questions, look at the stocks you're interested in and give you our expert opinion and a whole lot more. Hello and welcome. I'm Dale Gillham, the Chief Analyst here at Wealth Within, and joining me tonight, yes you are joining me tonight, is our Super Senior Analyst Janine Cox, and we're Australia's most trusted stock market educators.
Thank you for that fantastic introduction.
I know, I felt lonely last week when you weren't sitting here and I was trying to do that intro.
It was magic, you just clicked your fingers and there I appeared suddenly.
It's like, something like that.
You just morphed me into the show, didn't you?
Well, I did. It was like that, when you, those old shows when you were young and they go
up.
And they, like I Dream of Genie and stuff like that.
Oh, right. Very good.
But anyway, let's go and have a look. We've got a few things, couple little things we've got to do.
Now, if you've got a burning question for us, on the right of the screen is a chat box, so put in your questions. Also, a big hi to anyone new to the show. Great to have you with us tonight. There's a lot of new people coming on. You know, I was speaking to someone today that hasn't been on for before, and she's actually been on a little bit and then watched our recordings as well.
Okay. All right, so tonight, it's the last Tuesday in the month, we're going to go to and look at the currencies. So that's the first thing we're going to come through tonight. So while you're there, put some questions in the chat and we'll have a look at the currencies.
Fantastic. Okay, now on the screen there, you can see the list of currencies, the global currencies, the major currencies we've got there. Australian dollar.
Okay, when we're looking at the market, we can see on the screen you've got the euro this is all the last month, and so you can see here the returns on the last month from less return to the biggest return there. So looking at this, is the euro's done a little bit, but all the currencies are down though for the month. And Hong Kong dollar down here. Where's the US Aussie dollar compared to ours? Down 1.69%. So the Aussie dollar is a little bit weak across the board, and that's possibly because of news that we might get a rate cut on our market before Christmas. There's a little bit of speculation about that, but it's not too bad. But let's go and have a look at the charts of that. And first we're going to bring up the Aussie US dollar, and I'll just find that here. And we'll go into the Aussie US dollar. Do you want to sit there and talk, or do you want
Actually, that was a really good way to silence me, wasn't it?
It was a good way, yes.
Not much does work.
Just don't plug a mic in, guys, and she doesn't work very well. So
awesome.
I might give you that tip to your husband.
Okay, on the Australian and US dollar, we've got there on the screen. Now, this is the exciting thing for the Aussie dollar, isn't it? It looks like a basing pattern's forming there on the weekly chart on the right. You can see there that we've had these two bottoms close together, and then the dollar's come up, but it's pulled back again. So at the moment, we're just waiting to see a bit of a rebound in the dollar moving higher, but there's still a possibility for the Australian dollar to head towards 62 cents. That's very much on the cards right now for the Aussie dollar. And if it pulls back and we see the Aussie dollar trade back below the lows of these bars here in October, then that's very much where it's heading. So the next one we've got on the screen there for you is that's the Australian and US dollar again. Did you cover off the British pound?
I haven't looked at any chart.
Japanese? Okay, so the Japanese yen there, looking at that, I mean, that's similar to our market, only the recent low here in October was actually higher than our dollar. And you can see there it's pushed strongly off that bottom there, which is quite amazing when you consider how far the Japanese yen has actually fallen. So let's have a look at the high here from April 2013. It's actually dropped 33%, or more recently around 30%. So, it's got a long way to go to recover, but a trade above this high here in 15 November 19 would indicate that it's going higher. So then we've got the Australian dollar, Hong Kong dollar. So very similar to what we saw with the Australian dollar, US dollar, which you'd appreciate, you'd expect. And looking back over the history there, you can see how volatile this currency has been, and some of the big falls, like just to give you a bit of an idea about what has happened in the past and how risky currency trading can be, or how profitable depending on whether you're trading it in the right direction. 40% drop just there in a couple of months, Dale. And looking at the British pound we've got on the chart there, I really like the way that this is formed. It's so interesting. It's almost like it's got the brakes on and it's trying to slow down, but then the market just keeps selling it off and it keeps falling away gradually. But it's a more orderly decline, isn't it?
Well, it's interesting considering, with Brexit and everything else. So
very interesting.
You wonder if once Brexit actually does get through, what's going to happen, whether the Aussie dollar is going to strengthen against that or whether it's still going to fall away. I don't know.
Well, looking at it at the moment, we'd be expecting lower lows because that's the way that the currency has been trading, and we're down this week. So unless we see a move start to pull back up higher towards the top of this bar this week, which the high of that bar there is 52, nearly 53. So if we see it trade above that, then we know that it's probably safe. But to be more certain about it, you'd want to actually see it get above these lows here, so that the lows around 52.98, I think it is. Need your binoculars to see that one. So Australian dollar, euro there, you can see that this is really held up beautifully, and I love this formation that we're seeing. So a lot of the students there on the chart, you might be looking at that and see some real really interesting sideways consolidation, almost like an apex there we're seeing form, across these bottoms. If the price stops here and it starts to rise again, then it's a really nice little triangle pattern there, isn't it?
It is.
Which it could break out from either way, but once you see those patterns form, it makes it much easier to determine which way a stock's going to go when it starts to either push up to the high of that range or the low of the range.
I always like looking at currencies. It's interesting, isn't it?
It really is interesting.
And then when you compare it to what's going on in the economy and other different things around, and looking at things like their GDP and looking at things like employment rates, the
just to see
CPI.
how the economy's going, you mean, and whether that's reflective in the price. But our economy's doing reasonably well, and yet our dollar's continuing to fall.
Yeah.
I mean, we're highly dominated by commodities, so that could be having a strong bearing on it at the moment. But looking at what's happening between the US and the Aussie dollar, we know there's always, if the US dollar's going up, then we're likely to see that have an impact on our dollar going the other way. So looking at Australian dollar, Chinese renminbi, we can see some sideways consolidation happening there on the monthly chart, which is nice. You can see more detail there on the weekly chart with that sideways move. So when you see these sorts of moves, again, as I was saying before, often you break out of these moves. So above the high here in November, would see it move up higher. But if we actually see this continue to trade down, the risk is that it's going to break out of the bottom of that and then continue lower.
Yeah, the more that falls away, the more it costs us to bring Chinese imports in.
Well, that's right.
If we need to see that rise. And it's interesting, with the Aussie US dollar, I'm a bit torn because my book is sold in US dollars in the US. So that's great, but, but I'm also investing in the US in different things into the US, and that makes it more expensive for me. So it's like my publisher over in the US said, "Oh, look, we've got some costs you've got to hold your books. Do you want to? How are you going to pay that?" And I said, "Just take it out of my commissions. Pay it in US dollars from US dollars, so that I don't have to worry about all the costs."
Made it simple.
Yeah, it is, but it's interesting. I'd like the Aussie dollar a little bit higher.
Well, it's challenging for some traders because they're trading. There are some traders I've spoken to that actually are trading overseas. And so that can be really tricky for those people.
It is, and that's where a lot of people don't understand when they're looking at overseas markets. They're not just contending with the stock and the market, but now you've got the currency market as well. So there's three variables in the whole equation. What's actually happening in the systemic
So why complicate it?
Yeah, and that's what I think. I mean, it's so easy. I mean, I was looking at a broker the other day and I looked at their website and they go, "Oh, we trade CFDs." I go, "Great, that's really nice." But all the CFDs were US ones. And I went, "Well, that's interesting, isn't it?" So, and I thought, well, why haven't you got Australian ones?
Yeah.
And it's like, and people think, well, there's a lot of stocks out there in the world, and you see the brokers. Because I was looking around at brokers, comparing them and having a bit of a look, and they say, "Oh, you can trade 5,000 instruments with me." And I went, "Great, I won't have a life."
It's like walking into the lolly shop as a kid, and you think, "Well, which one do I choose?"
I know. It's like it's
Eeny,
like
meeny,
that's
miny.
why the Neapolitan ice cream. Used to get that with the strawberry
Three
and
flavours.
the chocolate and the vanilla. Like your mum would go, "Which one do you want?" You sit there going, "Oh, I'm not sure."
Oh, it wasn't hard.
There was
for
three
me.
colours. No, it wasn't.
Just give me a bit of everything.
You get a bit of it. I just went, yeah. But it was. So from that. But anyway, let's get into some emails. So thanks for that, Janine, and for bringing all that. So let's get into some emails. I've got one here. We had a couple of emails this week, but what I actually did was also I answered some of those without putting them on tonight because I was a little bit more personal.
Oh, so you got a
I didn't bother
personal
doing it.
response.
They did, just a little bit. One of them was from a lady who, I'm pretty sure I showed you, a lady who was watching with her husband, her name Corinne, I think, from memory, Karina. She's watching with her husband after, not live, but afterwards.
Oh, is this where the sun
Yeah, in the
came
sun.
out? Oh,
yeah, and
I
her
spoke to her via email.
11-year-old son, she said, was supposed to
Hello,
be in
if
bed.
you're watching, by the way.
Hello, if
We're
you're
talking
watching.
about you.
She didn't say her son's name, otherwise I would have said hello to him on the show. But she said the 11-year-old son came out and sat down and started watching the show with her and got in, and was asking lots of questions about stocks and everything else. And they're saving up money and they've read my book and they're slowly building up enough money to start a portfolio and everything else. I think that's fantastic. It really is good that you can teach your kids and my email response to her was, when you involve your kids, the dynamic of the family really changes because you actually become closer because you've got a shared interest that has a positive effect for both of you, because if you're teaching and working with your kids about investing, they're making money that benefits them, but you're also doing it, and the kids are pushing you as well to be there and to do that, and then you get better relationships.
A motivator, isn't it, then, for the parents? If time and money is an issue, all of a sudden you'll move time and money to make sure it happens.
Yeah, and it's a great thing that the family can do together, and it's really exciting. And I know, I've had dads tell me that they're closer to their son and daughter, and mum saying they're closer to their son and daughter, and their teenage kids are talking with them and getting excited with them about the market and talking about what they've got to do. And to me, anytime you can get closer to your teenager, the better, to be able to talk
Well, I
with
had
them.
a chat with a lovely lady who's a client of ours who's done our diploma course some time ago. She's investing with us in the direct equity managed account service. Now, she actually invested a small amount of money to start. Well, it wasn't a small amount, I suppose, but she invested a certain amount of money in the beginning when her son, yes, I think it was her son was born. And so after a period of time, that money is worth, I think the fund grew by, I think, enough to pay for an education. So, that's a really good thought, isn't it? To be able to put some money away when the child's born, and then you've got the funds for the child's education. Someone else said to me, look, I could keep buying shares when the child's young, and I just said to them, look, I'm not going to give you personal financial advice. However, if it was me and I had a mortgage, because these particular people had a mortgage, I'd just pay down the mortgage first and then look at, especially if the interest rates are high. But right now it's better to have your money in the share market. But it really depends on that the situation, doesn't it?
Yeah, well, I've got a few friends of mine who have had babies, and they say, what do I do? And I said, just put $1,000 as soon as the baby's born, and then every year put $1,000 for 10 years, and then forget about it.
Forced saving.
Just let it compound from there, and when they're 21 or 30, they'll have a pretty nice chunk of money there, which they could use maybe for a deposit on a house or something like that. And it depends on if you keep going with that. But thank you. But thanks for that email. It was really, really nice. It was really nice to see that sort of stuff and how what we do impacts people in such a positive way. But this one's from, I've forgotten his name now, but I will find it at the end of the email here. He says, hi Dale and Janine, really enjoy your videos. Please keep up the good work. I did your trading mentor course a couple of years back and wish to repeat the same again, as it gave me confidence and a sense of direction. I've chopped a couple of words out because his English wasn't fantastic, so I could read it a bit better. But he goes on to say, will DMP, when it started, its new trend after going sideways for years, it has gone up by 25% and has not given an exit signal as yet. In fact, it shows resistance at $60. I await the exit signal. May I please ask you, what is the fool's rally? I do not know. That one has to wait for a trend line or trend of 12 weeks. Is this correct? Please keep up the good work. As I told Janine, that the self-ungiven is the self-unfulfilled. Mahmood. Do you remember Mahmood?
Yes, Mahmood. How are you? Good to hear from you if you're listening.
Say it with a smile on your face.
And I hope you're well.
I hope you're well. So let's go and have a look at DMP. So we'll bring that up on the charts. I'll just go to our other workbook. There we go, bring that up. We'll bring up DMP and have a good look at that. I don't need to save that. So here's DMP, and as he said, it's gone up about 30% or 26%, was it? Since then anyway, but he's said there's resistance around that $60 mark, and so he's talking up around here. So there's a little bit of resistance there, but right now it's looking quite bullish. I'm not
it actually
sure.
Depends on whether you got on early enough or in a timely manner and had rules to get in there, whether it's a fool's rally or not, because you're only a fool if you haven't got a plan, really.
Well, that's true, and that's really about what we talk about in the Trading Mentor. And I do, do think it's great that you're going to go over the Trading Mentor again and revisit all that, because you really do need to make sure you're setting your stop losses like we're talking about. But that's really what I would do on this stock market, is just wait for my stop loss to be triggered, because you do have rules around trailing that up to make sure that you do keep a lot of that profit that you've made already, which I believe if it's gone up more than 20% for you. So I think right now it looks pretty good.
Actually, Mahmood gave me some advice once, and because he said that...
Other than that statement, unfulfilled and self-unforgive, whatever it is.
Do you know how it used to be that if you got cold feet, people thought you get colds that way?
No, I never heard that.
It was actually if the back of your neck is wet, that's where you're more likely to get colds and flu. So whenever that's going around now, I always wear a scarf. So I think of you, Mahmood.
Is Mahmood the doctor?
Yes.
Ah, see, I remember Mahmood. Hey, matey, I remember that because I remember you used to keep telling me about a doctor you'd had great chats with all the time.
Yeah, that's right.
That's Mahmood.
That's
there you
Mahmood.
go. See, you're not forgotten. So, but yeah, welcome back. Obviously,
and the Fool's
Mahmood.
Rally that we was talking about.
Oh, sorry, the Fool's Rally.
Now, on the Dow in 1932 to 1936, there was a rally on the market. So that's the oldest reference that I could find to the Fool's Rally on the markets. And but a Fool's Rally is really more about, as I said, if you don't have rules, then they're a fool. But I know you have rules, Mahmood, which is great. However, what it is if a stock is traded up and then pulled back, it may be in a decline. So, and you can see from the example we looked at with DMP, where along the way it actually had a Fool's Rally. So I'm not saying that now is a Fool's Rally, but if looking at the chart, you can see back here in July 2018, that's an example of a Fool's Rally. But how do you know at the time when the stock's rising that you're actually on a Fool's Rally?
Well, that's true. But I mean, talking about, you just said from 32 to 36, that's a 4-year rally.
Yeah.
So is that really a Fool's Rally?
Well, no. Well, I mean, if you're looking at here, March 18 up to the high in August 18, that's enough
to... That's a Fool's Rally,
yeah, because it's not sustained. So that's really what it's about, isn't it? It's a trend that's not sustained, and then it falls away and then takes out the low and keeps going down. But
that's exactly why I was actually... Now you're talking about that. That's exactly what I said to one of our diploma students today on an email. She was asking about that sort of stuff, about when's a trend actually turning and when is it not turning, but you think it might be. And I said, well, that's exactly why we have stop losses on, because whilst the market, you can do all this analysis and you can think, oh, well, it's hit its low, it's moving up, it looks like it's found some support, it's now turned to move up into a nice little uptrend, I'll get into it. The moment you buy, you're never ever 100% certain that the trend has changed, because confirmation of that comes a lot later, that it has actually changed. And so what you want to try and do is buy at the earliest possible time. And I said, well, that's exactly why we have stop losses on it.
There's a little bit more risk there, isn't there, in doing that? But it's all about probability. And so that's what we teach you, is how to make an assessment of that and what's going to be the best strategy to get in, so that, for example, that you know the stock. And I was talking to a lady today that she knows the stock. She only trades one stock at a time.
Okay.
She trades short term, and she does have 3 or 4 stocks that she could trade if she wanted to. And so when she gets out of one, she'll be into another one. But she knows them like the back of her hand.
Yeah, which is what we teach people to do, don't it?
Yeah. So for example, if we looked at that DMP example, well, you would know that once it's done this sort of a range here in August 18, the chances are that it's going to make another range that length, which is what it's already done just now.
Yeah. So, but just stick to your stop loss, matey, but that's all we would say. So let's get into the chat and have a look. So we've got a few stocks here. So fantastic. Can you put in WPI for Cherie? Cherie's a lovely lady. Actually, I spoke to her last week. I had a good chat with her. You're going to love her when
WPI,
you get...
WPI, was it?
Yeah, WPI. She's on the diploma course. She's just on, I think, Module 1 at the moment. And I said to her, wait till you get to speak with Janine. I tell you, you're going to have a ball.
Was it Woodside, was it?
No, WPI she's got.
No, it's not working for me.
It's not working. I think it's Cherie. Can you type in, Cherie? Because I've got WPI. Maybe it's WPL.
Please type it in again. If it's Woodside, that's great.
I'll go
we
back
love
up
Woodside.
again.
It's a good stock.
Well, let's have a look at Woodside anyway. But she's got maybe WPL. Looks like 9. But anyway.
Okay. Now Woodside, long term, looking at the stock, has these volatile times. Now notice on the monthly chart, we're just talking about DMP before and how stocks rise and you get these Fool's Rallies and it falls away again. But there's enough in these rallies often to trade. So it's, as I said, it's only a fool if you just hang on in a buy and hold fashion. But looking at how it went up in September 2014 or August 2014, it made a high. It rose up here in October 2009, and again we had another high more recently here, October 18. So it's interesting, isn't it, how far it's run, and that looks similar to this prior rise here. But looking at Woodside, if we see it trade below this month's bar, then I'd be more inclined to think that it's going to go south. So at the moment, looking at the monthly chart, it has been making higher highs, and this month looks quite good, potential recovery. But then we're not at the end of the month, we're close to the end of the month. I'd really like to see another move up to know more longer term that it's likely to keep going. So that's the monthly chart. If I just change that quickly to the weekly chart, we don't have a confirmed uptrend yet. You can see sitting here, and it has come to a point of resistance here, this high, and you can see the 3 weekly bars all around the same level, opens and closes, giving an indication that it may slow down temporarily and it's struggling to keep going on. So it'll be interesting to see, but I'd like to see Woodside pull back for a little bit before it heads higher. So we've got another stock there.
Yep.
You loaded up, was it Accent Group?
AXI, yeah.
AXI. So
yeah, that's from Buzzman. He said, "Hi guys, I bought AX1 Accent about 2 weeks ago at $1.59 after it broke a downtrend. It's holding the upward trend line after a series of high highs and lows. What's your opinion?"
Look, it looks nice actually at the moment, I think. Now, if there's always a condition to that. So the condition currently for this stock is always a but, I could say, isn't there? If it trades below that low in November 19, then obviously the rise is not sustainable and there's too much resistance here in the short term for it to continue to rise. But it just looks like it's trying to push higher and temporarily seeing resistance around this 172 level.
I can't see a downtrend line on it anyway.
No, there's no downtrend on it at all.
He said he bought it at $1.59 after it broke a downtrend line, so I can't see one.
Unless he's picked a downtrend somewhere previously to this. So it could be that, see, this is where people don't fully understand the rules and they're trying to apply it to the charts, and that's where sometimes people have issues with this. So, your money's on the line. You want to make sure that you've got proper rules and you understand the techniques and have been trained in it before you're actually using it.
There's a lot of resistance around that $1.70 though, isn't it? There is a lot of resistance.
You can see the lows building higher and higher, trying to push the price through, but it's just resisting constantly around that level.
Yeah, so just stick with your stop losses, mate. That's really what I would do. So just take it easy, make sure you've got a stop loss underneath it. But if it does break that more recent high that you saw on the weekly chart, then stay with it. But if it keeps going south, it's time to enact your stop losses, and that's what I would put on there. But let's have a look at another one. We've got Richard, who's asking about Bega cheese.
Okay, Bega cheese. We had A2
I'll
milk
go and
as well.
find his thing. Richard's saying, if I can find him.
Okay, Bega cheese is one I think we've talked about previously. There's this real huge resistance, right, around this $8 level.
It's on the live show. So
fantastic. Congratulations. Look, this is a big telltale sign. If you saw these 3 tops here, you just stay away from it because there's a potential for it to continue to fall. And I guess that was made really clear this particular month here, which was September 2018, when it reversed strongly. So that was the first step to tell you that it was more likely to take out this low here and then continued to decline. So now that this low in December 2016 has been taken out, there's a possibility the decline may slow down. It may start to recover, but it's too early to say just yet. The overall pattern just looks really ugly, doesn't it?
It looks terrible.
Big picture.
Yeah.
So, that's big picture view. So looking at the weekly chart just quickly, you can see there that we've had this big sell-off here, week ending 1st of November 2019, and often there's a flush out in the market towards bottoms. We see that happen. But this stock really needs to get back above around 420 and move strongly before we know that it's moving up again.
I think if you don't own it, Richard, I think I'd be staying right out of it at the moment, but just keep it on your watch list.
This is where it's a decision between speculation and good decisions, isn't it?
Correct.
Right now, if you were looking to buy that, you're really speculating. It's more gambling.
Yeah, it is, and a lot of people bottom picking, and that's really where I've been having a chat with somebody from my weekly report yesterday. It was, I forget the name of the stock actually, and they bought it as it dropped, and they've been bitten on it, and he's come back and said thanks for being honest with me and pretty much blunt about what I did, and yes, you're right, that's what I did, because the stock had fallen out of bed and he thought he'd pick it up cheap, but he's now been bitten on it, and he's not making any money. So again, if the stock's falling away, there's a good reason for that. So let's get on to a question now.
A2 milk or not?
No, in a second, because it's a question from William. It's on A2 milk, but it's not about the stock itself in search of the chart, but you can bring it up. But the William's asking with A2 milk, he said, "Hi Dale and Janine, is there any impact on the share price if a company enters the ASX 50 like A2M is being rumoured?" Cheers, William.
Hence the rise in the share price.
One. Yes.
Yeah, so the fund managers are licking their chops when they see a stock go from one index to another, because often that means that these stocks get greater exposure to the big funds, basically in the nutshell. So that means more demand for the share price, doesn't it?
It does. I mean, obviously it's not in the 50, and there's certain times of the year when they readjust the indices. They don't just automatically jump into that. They just do get readjusted. But I mean, it's jumped quite well over the last week. It just flew off on some good news. So it'll be interesting to see what happens, but it's just more volume going forward.
I think we said last week or the week before, you can't get into that now. There's no rule to get into it, and you'd be really taking a high risk proposition to do that, because look at the last time it actually rose strongly, August 2018, and then reversed and continued lower.
Yeah, it did. It did, very, very, very much so. So let's go on to another one. We've got, I think it's Monia, and it's BD. Oh, I can't even read my own writing, guys. BDI it is. So let's have a look at BDI.
Have I got the right stock here?
I'll have a look. I'll just
Surely
check.
not.
Well, it doesn't. So we'll type in AZJ2 for Adrian.
Okay, AZJ, that's better.
He said, hi, darling. Sorry, BD1. It's called BD1 it was.
Okay,
Sorry.
BD1.
I think I need to clean my glasses out, don't I?
Yeah, I think you do.
He's saying, hi, darling Jenny, what do you think about BD1? Could you please advise?
Oh, look, it's not much better.
It's not much better, is it? It's pretty terrible.
BD1 is Bardi, is it? Bardi One Life Sciences Limited. And look, this is just very liquid, highly liquid company, and still trying to recover off the bottom. Often with these companies, they're in experimental phases and trying to get technology off the ground, and I'm not sure about the case with this company. Perhaps someone can look it up for us and just type in a few words.
Don't know, but it's, we've fallen quite heavily.
It's not healthy. I bet I could almost guarantee you that at this point here, some really strong news was coming out in the media, or something got released, especially around here. Something got released to the media. The share prices shot up, but the reality came back to roost, and the share price is trading at what the market really values it at, which is not a lot. So, it's not a stock that I would even say look at, really.
No, if you're not in it at the moment, don't get in it, and if you are in it, you should have been out of it a while ago, but I'd have a stop loss on it again, maybe. So, and it's not a kind of a stock you'd have for if you're not really highly experienced trader, you wouldn't get into this stock. So now let's have a look at AZJ for Adrian.
Okay, AZJ.
And I'll just grab his.
Now, Horizon Holdings has done extremely well.
He bought it at 456 in February.
Okay, yeah.
He's got a stop loss.
That's great.
Sorry, and he has his stop loss at 556, $1 higher. I'm not sure it's below why he's got it higher, but anyway. But he's obviously been up, currently going sideways, and has nearly tripped my stop. What are your thoughts?
Well, he's got his stock higher because it's gone higher.
It's gone higher.
Okay, so it's rocketed through that level, taken out these all-time highs. It looks fantastic. 556 here, did he say? So at the moment, I don't understand the reason for the stop loss, but let's just have a look at the weekly chart. You can see that this looks like it's rolling over a bit.
Yeah, it does.
So, there's a gap on the weekly chart. We could see it come back to that level. I would say that if it could come back about 10% if it trades below the bottom of this week's bar. There's a high probability for that.
You're saying the stop loss is a bit tight. Is that what you're saying?
556, he's got his stop. No, I'm not actually saying that's a bit tight, because if it does come back and trade lower, then it's going to fall more than likely. If we do see it recover and start pushing up around these sorts of levels, then I'll eat my words, and it's not going to fall away. It's going to rise. So, I've got to consider both sides of the coin.
But it's probably just going, because people don't understand stocks go into consolidation and distribution phases, and all different lengths and different patterns that they make. So right now, it's still looking okay.
That's a really interesting study. I don't know if any of the students who have done this part, the accumulation and distribution side of things, once you get that, it's just so interesting, and it makes a whole lot of sense out of where stocks are in the bigger picture, doesn't it?
Correct. Now, we've got a question from Jacob, but it's not a stock. And he says, well, I think the first one he says is, love your show, I'll try and watch it each week. Thinking of starting the diploma next year. And I'll just find his other question.
Fantastic.
He says, Bank of America's dividend has doubled in the last 10 years, which is better than wages growth in Australia. No need to fear the market. And I thought, well, that's an interesting comment from that point of view. Generally, Bank of America has obviously been bearish, and that's why it's dividend, which leads us into our topic in a minute. So that'll be really, really interesting. And it probably is better than wages growth in Australia. But when we get to that, I'm actually going to be showing you some of US stocks with high dividend yield. So we'll have a bit of a chat about that. But so let's get in, and just one more stock before we get into our main topic. So we'll go to Kogan for Aman. I think it is, Aman. So thanks, Aman, for sending that in. So I'll have a look at Kogan. I know we've got a couple.
Just quickly, nice trend we're seeing on the weekly chart there. It's looking good. We have seen a bit of a reversal last week. It could be topping out. We can see opens and closes around the same level. But at this stage, there's nothing to be concerned about. It's on a nice uptrend. Trend line looks like it might be underneath there, but you'd have to just cross-check that. Looking at the monthly chart, it may have reached a point of resistance around $8 and trade back temporarily, but looking overall, I mean, this is a good little trading stock, isn't it? But it's just lower on the liquidity side of things. A bit lower than what I'd like to see for most portfolios, but you can have one or two of these types of stocks in the portfolio.
Yeah, you can. I mean, he's got it in his portfolio, he said, and he's also got 9 network, which we won't do right now. We might come back to that a little bit later. So, but right now he does have this in his portfolio, and it's looking all right, as you said.
Yeah, so
it is looking quite
You'd have
nice.
a stop loss, obviously, on that, and trailing stop loss to be managing the risk, that's all.
Yeah, absolutely. That's all you need to do. So, but if you're watching the show, and we've actually got the people that we said hello to, Christina and her son. They said, Karina. Sorry, I forgot to say that. Karina. Hi again. So they've actually said they're actually watching live. So. They said thank you, but
good to know that you're out there.
If you're a first-time watcher of the show or you're new to the show, remember to hit that subscribe button, and also remember to like the show. It really does help us, help other people to get to know what the show is and help them invest and trade the market and understand the market a little bit better. So please do that right now. Hit that subscribe button. Now, okay, Jenny, it's really now time for our topic for tonight's show, and I know this is something we talk about a lot, and this show's about investing in high dividend yielding stocks in 2020.
Okay, well, it is true. Investing in the highest dividend paying stocks can deliver a good income stream. What many don't realise is that the reason these stocks are most likely paying high dividends is because they're actually falling in value.
Now, that's why it's really important that you understand that as the price of a stock falls, its dividend yield actually rises and therefore becomes more attractive to investors seeking dividends for income.
Now, some would have you believe that a high dividend yield means the stock is inexpensive, which therefore provides an opportunity for investors to achieve good capital gains. But what this really means is that the stock has fallen to such an extent that the dividend yield is now more attractive, as Dale just said.
Well, you get people just watching the dividend yield goes up and they just jump into stocks, don't they?
They do, but the funny thing is that I've seen this happen, and then I've seen the companies announce that they're going to cut the dividend.
They do that. Well, I know a lot of people were talking about that with Telstra, saying, well, it's going to cut the dividend yield. And how many people did we see over 10 years buying Telstra, saying it pays a great dividend yield, and the dividend yield is getting better and better and better, and they kept buying it, but they were losing 20, 30, 40% on their capital.
Yeah, it's just crazy.
Every single year. So, and so whilst investors don't want high-risk investments, this is exactly what they're getting when they buy stock that is falling in price just to receive a high dividend yield. And it's for this reason why I don't recommend investing for dividends alone. Always we go for capital gains first, dividends the bonus on top of that. If you need the dividend to make it attractive, then you probably shouldn't be in it in the first place. Now, the stock must represent really good value to us first and foremost, and good chance for capital gains. Because if there's not good chance of capital gains, then we wouldn't have our money in it. So, in other words, you look for undervalued stocks that are likely to achieve solid growth in terms of capital gains and good income into the future.
Well, we always said if you're not getting the capital gains, then somebody else is getting it.
Well, yeah, and in my book I talk about if you're going to get one source of return from any investment, then somebody's always getting something else. So if you're just getting interest from the bank, then they're making capital gains out of you. And to me, you need 2, capital gains and income. And you get that with stocks. But you don't want to buy stocks with high dividend yields that are falling away. But we've got a couple of spreadsheets. We've done a couple up. Janine's tackled the Australian one, or Australian stocks, and I've got some a spreadsheet based on some US stocks as well for you.
So do you want to start on the Aussie? Or
let's start on the Aussie. So let's bring up the spreadsheet here.
Now on the screen there you can see that we've got a list of companies there. On the left-hand side is the stock code, company name, industry, sector, market capitalisation, the current price, dividend yield. Now, this obviously is not necessarily the current price as of today, because
they're the highest dividend yielding stocks in the Australian market.
Correct. So this is the, and it's interesting to see the types of stocks that are there, because there's no really big names that jump out at you necessarily that you would expect to see in the top 20 shares, for example.
Well, I mean, Sky Network, I know that because we've both been on that a gazillion times. I know that one. Outside of that, I'd pretty much Jupiter Mines I know a little bit about, but nothing much on the rest of them.
What I found interesting was there's a real mix in terms of the sector that these stocks are in, because I was expecting that often is the case that the mining companies are paying much higher dividends to try to attract investors, but that wasn't the situation here. And look at the dividend yield on the right-hand side. So ARQ was actually the top one with 21%. Coming down here, Jupiter Mines actually was higher, 30%. We've got Globe, 10%. So a lot of 10%. Now, these are all, when I did the filter, it was all on stocks that were paying dividends above 9%. And so that's what the filter process came up with. So interesting to see the market capitalisation, the size of these companies, and they're just a few million, some of them.
They're just very tiny, aren't they?
Yeah.
But what you can see down there is at the bottom of here, so what I've done is just in our Optima, I just did the yearly, I just put all those stocks into a watch list and said, what have they done this year? So I see 1 January. And if you owned all of the top dividend yielding stocks, you'd have a pretty sick and sad and sorry portfolio. With such big falls on most of the stocks, only 2 making gains, and those 2 are Mayfield and obviously Shiro. Shiro did really well at 27%, but your portfolio would have fell out of bed.
Yeah, now there are theories in the market that if you invest in the top dividend paying stocks in the higher part of the market, so bigger, more liquid companies, that in theory over time you should be able to make money. But what they've proven, and it depends on what the market's doing as always, as we know, because what they've proven is that that's not necessarily the case when you look year after year.
So we're going to show you, the next tab on here is the top 50 stocks. So this is the top 50 stocks with the highest yield. So therefore we've got, 10 of those stocks roughly?
Yep, 10 of those.
And there's their yields of the top 10 stocks. So these are stocks everybody knows. So they're very well known, very highly liquid stocks. And what we've got here is those same stocks in the last year. Now you can see here that a lot more of those are in the green. So they've done better. But if you're looking here, so the market itself has done how much this year? 20-something percent?
Yeah, so if you look at those stocks, and you can see that most of them are actually below it.
Most of those have performed. Outside of Stockland, most of them have only done what the market's.
So that sort of holds true with what you're saying, though, doesn't it?
Yeah.
In terms of, those highest dividend-paying stocks are not going to be the best performers for your portfolio, so you're actually likely to get a worse return if you follow that strategy.
Yeah, you're going to get an average to worse return. Now, these figures here don't include dividends, so you've got to add the dividend onto those stocks.
Now, I was really surprised at Stockland being up where it is, because at times it can be a big dog stock, classed as a dog stock, because it does have a lot of time on the market where it's falling away. But every stock, and this is one thing I said to someone, even the poorest performing stocks, as long as it's a big stock, are likely to be a great stock at some point down the track.
Yeah, they are, and these are all good stocks long term, but it's about when do you buy them. So let's go and look at, there's one more chart I want you to show, and then what we'll do is we'll have maybe bring up a couple of charts of a couple of these stocks.
And there are different times to be trading stocks. So some stocks you can hold for the short term, because that's just the volatility of the share and how it moves. And some of them you can hold medium, but some of them you can't hold long term because it doesn't make sense to do it.
No, it really doesn't. So this is a strategy buying, like if every year you adjusted your portfolio at the start of the year to put these top dividend yielding stocks in the top stocks in the market, say the top 20 or top 50, and you looked at the top dividend yielding stocks in that and you put your money into that, you'd get an okay return, but you're going to get a better return by being more active and do what we talk about, and so buy them low, sell them high, and the dividend yield being secondary, not primary in your decision making process. And a lot of people think, it's like, well, I'll get this great dividend, 5 and 6%, and it's because people want 2 things in the market, and this is proven by the ASX Investors Survey. They want 2 things. One is they want a guaranteed return, and number 2, they want to get at least 8%.
Yeah, so they're going for what's perceived to be safe.
Correct.
When we've actually shown that the highest dividend paying stocks are actually the highest risk.
Yeah. So let's go and look at the US stocks, and this is going to shock the pants off everybody, because what you're seeing here, these stocks here are the highest dividend yielding stocks in the S&P 500 right now. So I did this
and there's some big names there.
There's some big names in here. So you've got TripAdvisor, Macy's is a big retailer there. Invesco is a big company. So there's some big companies with their market cap. Now what I did here was look at, okay, so here is their percentage gain of loss to the 15th of November, because I did this for my US report 2 weeks ago, and we talked a little bit about this.
Okay,
and then
so
I
the
said,
guys watching can go and
yeah,
watch
they can
that?
have a little bit of a watch of that. That's not last Monday's report. Now, if we put $1,000 in each one of those, you had $10,000 in the portfolio. Over this period of 2019 from 1 January, you've lost $1,243, or you're down 12% on these big stocks in the US. So the same thing works in the US. Now, again, I didn't go and do the top 10 or top 20 stocks in the S&P 500, right? Because this is the top dividend stocks in the total of all the 500 stocks. But it just shows you don't necessarily go for high dividend yield, because the return here is after dividend. So you still lost 12% after all the dividends. And the reason why some of these stocks are pretty bad in terms of their bearishness. I mean, Macy's has been going down for ages.
But I wonder if you actually turned it around a little and you said, okay, let's find the stocks that are going in a trend.
Yeah.
Anything that's trending up that pays a dividend of more than, say, I don't know, 5%, and then see what you would have got over multiple years, whether it was reliable.
Well, yeah, you can do that as well. But one thing I want to show people now is just one little thing I want to show them. I want to show them the top 20 shares on the Australian market. And these are the top 20 shares on the Australian market. And I'll just make that a little bit bigger so everybody can see it, so they can see the returns there. So this is all of the top 20 shares on the Australian market over this year. So these are the returns that we've got now. That spreadsheet that you had the top stocks, the top dividend yielding stocks. But look at this.
Out of the top 50.
Yeah, you have to get right down here before you go down to 9%. So if you just numbered these 1 to 20 and just had an odds and evens portfolio, you would have done better than the one that you had with the highest dividend.
Now that's in a bullish year. I'd be really interested to see what happened when the market went bearish in 2015-16 and how all this unfolded.
Yeah, so would I. I mean, it's an interesting study, and this is what Janine and I do quite regularly, is we do things like that. We pull this sort of stuff apart, going, well, how does it work? And it is really interesting when people say to me, they might make a statement on the YouTube channel, on Facebook or something, and go, this is how this works. And you go, well, have you done your research? And I ask them, well, how do they validate that statement? And they never come back with any reasons how they validated it, because they just make these offhand statements that they may have heard somewhere without validating. Janine and I, when we talk about stuff, we validate it, we research it, we check each other's work and our research.
And that doesn't mean that there's not a
doesn't mean there's not a mistake in it.
in the spreadsheet.
So we're not always
we're not perfect.
We're not perfect, but you know, to me, it's really about qualify and quantify exactly what you're talking about, and that's why we said last week, you know, just because we teach people in our diploma or other courses, we actually tell our students to go out and test it on the, you know, make sure it works for them, not just, you know, blindly follow what we're talking to them about. But hopefully you've enjoyed this week's little sojourn into our main topic, into dividend yielding, and hopefully we've got you sort of leaning more to less on dividends and much more on the capital gain, because the share must be a good share first. It must look and present good capital growth opportunities before you even look at the dividend. That's the last thing you should be looking at. Always go for the best stocks first, and then the dividend yield is a nice little bonus. And I'd rather make 50% on a share and get a 1% dividend yield than get 7 or 8% dividend yield and the share going down 30%. That's what I'd rather. I'm not sure about you, but let's get back into some stocks.
That's wise advice. Okay.
Well, it is. So let's bring up, we've got one for Peter. It's LBL. So L for Lima, B for Bob, L for Lima. So let's have a look at that one for Peter, and I'll just find his question while you're bringing up the stock, or you've got to go to the other thing. So, but if you've got a question for us, just shove it onto the chat. We'll get to those. I'm going to write down all my stocks in a second, so we'll get to them for you. But as I said, just hit the like button if you're liking what we're talking about here, and if you haven't subscribed yet, make sure you hit that subscribe button so that you keep up to date. So let's go to the charts
LBL,
now.
so is it Lazer Bond Limited?
Yeah.
Now, Lazer Bond Limited has actually been quite illiquid. Notice the monthly chart, which shows the illiquidity of it, with the bars having the same, similar or same ranges month after month. And, you know, when you see that on the monthly chart, it just stands out as being a liquidity issue. But looking at the weekly chart, we see that changed over time. It stands out. See how there's the gaps, a lot of gaps between bars, a lot of ranges that are very similar. As the stock continued to trade sideways and then up, the liquidity started to change. And let's have a look at the volume so that we can understand what was going on there. Now, you'll notice the volume changed in around this period here in August 2018. So it's really only been for about 16 to 18 months that it's improved. So there would have been some announcements in the media, no doubt. You can just do your research and see what you can find as to how this company's been unfolding in terms of its business activity. But looking at the recent decline, you just have to be familiar with how this stock moves. So it's actually fallen around 34%. So you could be thinking, oh, you've got a great return. All of a sudden, a few weeks later, if you're not managing your risk carefully and you need a tight stop loss on stocks like this to get out, you could always get back in. That's the advantage at a later stage with some good rules. So that's Lazer bond. I'm not liking it at the moment. It's a very volatile stock, and I wouldn't be looking at it for my list.
I don't think I'd be looking at it on my list either. So let's get on to, I've got a question from Vanath, I think. Sorry, mate, if I've spelt your name wrong. He's going to get Bank of Queensland, but he's got a question. So if you type in Bank of Queensland, he goes, please have a look at Bank of Queensland. I know it might be a falling knife, but want to know your thoughts.
Good,
thank
using
you.
Our terminology.
And he says, hi Dale and Janine, love your show. I like the way you guys keep it very simple. So thanks, matey. That's what Janine and I tend to do, is we make the complex nice and simple so that everybody can do it.
Okay, now Bank of Queensland looks a little bit like a lead sinker at the moment.
It does, doesn't it?
Falling to the bottom of the river. November 2019 is clearly down. So at the moment we're seeing the stock price at around $8.05, all the way back to where it was trading in February 2013. So just again on the point, you might have got good dividends on this particular share, but the capital growth would be almost zero if you had bought it back in early 2013, or you might be in a slightly negative position. Hence the reason again why not to buy and hold. But the stock's really been trading down since all of that announcement, or since everything happened with the anti-money laundering and the Royal Commission. The second-tier banks have actually struggled, as well as the major banks, except for Commonwealth banks held up reasonably well. But looking at Bank of Queensland, I don't like it. I would say that eventually you're going to get a really nice trend line down there on that decline, but I wouldn't be touching it until it's actually gone back above a trend line. Really.
Nah, I wouldn't be touching it. And if you are in it, then I'd probably be looking at possible exit strategies, that sort of stuff, but I wouldn't get in it now from that point of view. But we've got FMG. Dan wants FMG. Now, that's been one of the best stocks this year, looking at returns from there. But I'll just read Dan's question. It's he said, hi, Dale and Janine, thoughts on FMG? I hold a large portion of my portfolio in this stock, 60%. So I'm assuming he means 60% of his portfolio is FMG. Was wondering if I should limit the size now or continue to hold, as they seem to be going quite well.
Well, that really depends on whether that he put 60% of his portfolio into the stock, or whether it's actually grown that much. Yeah, exactly. Because if it's grown that much, then you're not necessarily going to give it a haircut unless it's looking like it needs one. But at the moment, it's continuing to rise. Interesting that it's taken out all of this resistance around 940. That doesn't mean it's going to continue to rise, though. I think that it might actually peter out. Maybe we'll get another couple of months up and we could see this stock slow down a bit, because I just think that it has consolidated nicely sideways, but I think there's a short-term peak coming, is my view.
Yeah, I think so. But it is an interesting question. I remember one day I was chatting with some traders, and they were just getting into trading, and they said, my financial advisor tells me I'm overweight in BHP. And I said, well, what do you mean? He goes, well, we bought it at this price. It's now like tripled in price, and it's now become a big chunk of my portfolio. And I said, well, what do you think? And he goes, well, I don't want to sell it. It's making me money. And I said, well, that's my answer.
Yeah.
Why would you do that? It's not about being overweight. As long as you've got a stop loss on it.
In the industry, it's called rebalancing your portfolio. Now, the financial institutions, the big funds, actually make a lot of money out of doing that. The brokers make a lot of money out of doing that and reshuffling. And a lot of them have to stick to the rules of the mandate, which mean that they need to have certain weightings of certain shares. So that's really restrictive from our point of view, isn't it?
Well, it is. I mean, why would you sell something? And what I said to him, I said, well, you know BHP is going up. And they went, yeah. And I said, and it's been going up for a while. And they went, yeah. So I said, you're 100% positive it's going up? And he went, yeah. And I said, so if it starts to go down 5%, 10%, can you sell out and keep all your money and most of your profit? He goes, yeah. And I said, so what risk have you got?
I love the comment, you're 100% positive it's going up.
Well, you have to, because you've made a lot of money on it and it's going up. So why would you get out of a stock that you're making a lot of money out of just to go into one you don't know is going
That's
up.
right.
Because we talked a bit about that a minute ago. It's like, well, how do you know it's going up? And
well,
how
this
do you know
one,
some
for
of those?
example, if we use FMG as an example, it's making higher highs at the moment here on the weekly chart, so it's going up. But as soon as it stops doing that, therefore, your view might change and you need to invoke your trailing stop loss.
Okay, now we're going to get into another stock I've never heard of before.
Okay.
MP1.
MP1.
From Evan. So I'll just check on Evan.
That's Megaport, isn't it?
Is it? I'm not sure. I've never seen MP1, so there's been a couple of stocks and I haven't actually had a look at yet.
Okay, now Megaport's actually, it's on the lower liquidity end, but I actually like this share. It's traded up really strongly over recent weeks, but look at the big push down. Now let's have a look at it in percentage terms. I'll go to the monthly chart actually because it's a bit easier to see. We can see that it actually fell around 30%. And notice a large number of stocks, when we're looking at how far they fall on these moves down, it's often 30%. 30-40% as part of a decline. Now it looks like it's trying to recover to take out that all-time high on the monthly chart. However, we don't have any confirmation of that, that's actually the case. I'm going to try and
he's looking to get into it because he said, "Hi guys, hope you're well." Yes, we are, matey. Thanks very much.
Well, you need rules.
Yeah, he said, "Can I please get your thoughts on Megaport? I'm not in the stock, but I'm looking for an entry point to invest a small amount. Not sure how much further it will run."
But he's asking us to tell him how to buy it.
Correct, and we're never going to do that. And this is, I don't know how many times we've said we're never going to give people buy and sell prices and buy and sell points on a stock, yet people still ask me all the time. You know, and it's you need to decide that for yourself. For us to tell you that, we start getting into financial advice, and we don't want to do that because A, we shouldn't be doing that, and B, it can be a little bit dangerous for you because
you might take it out of context.
Correct.
So, you know, this used to happen when we were on Sky Business at times. We would say, you know, whenever I was talking about a stock, I would say, look, if it goes above this level, I like it, and it's more likely to continue to rise. And if it trades below a particular level, then it's more likely to continue to fall. So that's telling you, you know, what we're thinking about, whether it goes one way or the other, how it's likely to unfold. Now, with this stock, at the moment, it's going up. But from our rules, there is nothing there that we could buy. It may have actually triggered a trend line exit, and so then you'd be looking for another way to get back in. And right now, from our perspective, we can't see it. So,
and it's also about why this stock too.
Yeah,
that's also a lot of people because they might be on a chat forum, or they might have read something in a newspaper, or they might have been on some broker's reports, or it could have been any sort of thing that they've got in their inbox. And they go, oh, I want to go and look at that stock. But you don't know who the person is that's telling you that, and whether they've got this interest in you or promoting a buy or getting people into it so they can keep the price up so they can exit into it. And that happens quite regularly for people. But right now, we don't see anything enjoyable about this stock at the moment, and so we wouldn't be looking at getting into it myself. So let's have a look now at, we've got Shane, who's never ever asked us for a stock, has asked us for PAR or OSL. So PAR, so let's go into that one. So I thought we better look after him tonight.
Paradigm, is it biopharmaceuticals? Traded up really strongly. Actually, I would have liked to look at the other one. OSL, is that more liquid?
Look at that. Go and have a look at that one too.
Let's bring it up and just see what it looks like.
Go and have a look at that. So bring it up.
No.
It's not more liquid.
It is a bit more liquid now, but it doesn't look like it on the weekly chart. So we've actually got the PAR. We've gone back to that one. Now you can see this little sideways consolidation. That's just an indication that the buyers and sellers are reaching equilibrium, and often the big institutions are looking to pick up the stock as, you know, for these micro portfolios. Some of them run the more micro cap type stocks, and try and pick up the stocks at lower prices rather than pushing the price higher. But you can see here eventually the market will reach agreement on the price, and that's what drives the price higher. So more buyers come in than sellers, and the stock goes up. Now, it's looking really nice. If I was holding this stock, which I wouldn't be holding this stock because of the size of the company, but looking at it, it looks like it's in a nice little trend. You may even be able to get a trend line up underneath it. Just bear in mind how fast this share can move when you're looking to manage the exit or trying to find a strategy to exit. 41% fall in a week, literally wiped out your entire return. In fact, could turn you into a negative result after sitting on a positive result. So just bear that in mind when you're looking at Paradigm Biopharmaceuticals, excuse me. So if we've got another one to have a look at, a bigger stock, maybe someone's got a
you can type in
company.
IPL from Anand. I'm just sort of scanning through some of them at the moment. So just type in IPL for Anand.
Okay, so Inside Tech Pivot has actually pushed down lower this week, and it's just hovering at around these levels 320. There's a lot of activity that's happened around this 320 level, so it may find support in the short term, but we need to see this start to move up over the next couple of months. There's a lot of agreement. You can see on the monthly chart, but look how volatile it can be at times. So you have to know the share and understand how you're going to exit if it does trade lower. But at the moment, it's really fallen shy. It's broken out of this level here. You can see if we go quickly to the weekly chart, it broke higher, looking like it was going to continue to move up, only to continue back down. So this shows the strength of these levels here. I actually like Inside Tech Pivot from a fundamental perspective, bigger picture, longer term. But at the moment, if you're not in it already, then you wouldn't be looking to buy it. But if you are in it, then you would be looking to manage your risk on it.
Yeah. So I'm going to give you another question because I like to break up the stocks with some questions.
Okay.
So that we're not always just talking about a stock. So now I've got a question that I've left to nearly the last bit because I thought it was probably the best question of the night. Now, it's from somebody, I'll just pick it up. It's from Jesse. He said, "Hi guys, how does capital gains tax and discount, 50% discount after 1 year, affect your decision to sell a stock? If I should sell now, but I'm 2 weeks away from capital gains discount, should I wait, etc.?" But he doesn't tell me the stock code.
Right.
So you can answer that one.
It's interesting, isn't it? Because as an individual looking to establish a portfolio and come up with a strategy, you might decide to incorporate that thinking into the strategy that you choose. Because you might be looking for a strategy where you're holding stocks for 9 to 18 months and attempting to hold them through a 12-month period. Now, the only challenge that you've got with that is you can expect more volatility in the share price if you do look for those sorts of strategies, because you might be trading more on the monthly chart, medium to long term, to be able to do this and not get a lot of exit rules triggering.
I'll see if he's given me the stock.
With the capital gains rules, we don't actually look at, that's not our focus, looking at the tax side of things. We're more focused on, can we find a good strategy that's going to get a good return over the long term and medium to long term, and then making decisions based on whether it meets our targets for growth, etc., rather than looking at the tax side of things, because we can't look at individual personal circumstances to understand how that would affect an individual from a tax perspective as well. Have you got any other comment you'd like to make on that?
Really, on that is to me it's about your plan, because sometimes we do go over that 12-month period, and it's more of, if it's going up, stay with it, and if it's going down, you might be trying to get the discount, the 50% capital gains discount, only to see a lot of your profits erode by holding on to the stock. So it's one of those things, do you hold it, do you not hold it when you get this close? And if you're 2 weeks out, it's getting to that point, you're like, how much is it going to fall?
But see, an individual who doesn't have the experience analysing shares has got no way of knowing whether that stock's likely to fall strongly or not. So that's one of the things that we do check, is just to see whether, when it's getting, like Dale was saying, if we're looking to sell a stock, we do ask the question, is it getting close to that 12-month mark? And if it is, then is it close enough that we could actually, manage the share without risking too much on the downside?
The things you can do is, if you've got a broker that's got, let's say, CFDs, and you've got access to the CFDs, you can actually take a neutral position by shorting the same amount of stocks, or shorting CFDs to the appropriate amount of your stock, which puts you in a neutral position for 2 weeks. Basically, if the share goes up, the CFD value goes down, and if the share goes down in value, the CFD value goes up, and there's a little bit of holding costs over those 2 weeks. So that's like a hedge that you can have on it.
But an investor who has no experience in having managed a share portfolio and done it successfully would never do that.
Well, no, the broker would help them do that. So it's pretty low risk, that sort of stuff, but somebody would help them do that.
Because they could end up being, worse off.
Well, you're not going to be. You're in a neutral position. How can you? That's the point. You're in if the share goes up, you're making money, and if the share goes down, you're still making money.
Well, what happens if the stock goes ex-div?
Well, then it's just a little bit more, but you got to look at, if it's a small position, like it's only $1,000 something, it's not really worth it, is it? If it's a $100,000 position, it's a whole different ball game.
You just need a really good broker then, if that's what you're saying.
Yeah, but I used to do that. We used to do that all the time with options. So often you do that around options time. With capital gains tax and all that sort of stuff. You just go into a neutral position, it costs you a few bucks. And some holding costs, and you do that. Other times you'd actually do, like around tax time, you prepay
prepay the interest.
Prepay interest on some things, whether it's you borrow money to buy options to long dated options, and there's a whole range of different tax strategies that you can use depending on who you are and how big your portfolio is. So we've probably got a lot we talked about that's probably going to get a bit too in depth, a bit too technical. So let's have a look at another stock. We'll have a look at, let's have a look at Nine Entertainment for Eamon, that one. And we've probably got time for two more stocks, I'd say.
Okay, now
I don't know if you hit the like button.
Okay, you better do that right now. He's serious. Now, Nine Entertainment is actually in a downtrend at the moment. Now, looking at that, it's nowhere near giving a trend line entry. It would take months before that would be likely to occur. And look how volatile it is. It's been quite bearish over time. This high that occurred here in May 2018, we saw a drop of 51%. So that's the sort of animal that you're dealing with in looking at this share. We can see that recently it tried to recover some of that, the amount that it lost, but it's just really going nowhere. So look, I don't like it, is my perspective. I would have to see this stock trading right above around about $1.90 to $2 and then pushing higher before I would think this was on a long-term rise again.
We've got a question from John Bassett who says, what's your position on ETFs? And I know we've talked about that. We've done a show about that. When was that? That was months ago we did a show on ETFs. Now, Janine and I have sort of some varying opinion on ETFs. Basically, my thinking is if it's an index ETF, you're wasting your time because you might as well just buy the top 10 stocks and make more money, because the index ETFs struggle to even match the index because of their fees involved in it. If you're getting into an area that's really unknown, like let's say some sort of biotech area or artificial intelligence or something like that, and there's an ETF around that, I don't have as much issue with that. But anything index, don't even worry about it. You're wasting your effort. You may as well just buy and hold the top 10 stocks in the market.
So I should sit here quietly then,
No, you can say whatever you like, and if you want to bring out your pink boxing gloves, bring them out.
Okay, so look, I actually think that ETFs have a place at times. So for instance, when, if we're talking about uni students who want to get a start in the stock market.
You and your uni students getting started, buy stocks.
Okay, so you can actually trade an ETF as well. That's the advantage with the ETFs. And I think that, having one is attractive for some people because they don't have to look at lots of shares and look at dividend statements and everything else. So I think just to get a feel for it. I'm not saying that's the way you should stay in the share market, but just to get an understanding of how the market moves before you launch into anything like trying to pick 6 or 8 shares, individual shares. Even though Dale makes it so simple for people in the book, I think some people still struggle with that. So if that's you and you are struggling with being able to select the stocks, even in the top 20, he narrows it down right to the 20 and you can pick a few shares out of the top 20. But if that's you, then have a go at an ETF that's on the broader market.
Absolutely. So I'm all agree to disagree half the time on that, because I just think it's so easy buying top 10 stocks. Just pick them and you'll make more money. But anyway, we'll have a discussion about that later, okay?
Okay.
Thanks for being on the show, but it is the end of the show, so thanks for watching. Especially Isaac, matey, thanks for being on the show. That's the 11-year-old.
Yes, Isaac, well done.
9. So thanks, matey. Grab my book off your mum and dad and go to your room and devour it, and then ask them lots of questions and bug the hell out of them for me. Okay, so do that. That's your role, matey. We do hope you've enjoyed tonight's show, and thanks for participating. As always, if you'd like to see this show grow, remember to share it on your social media with your friends and colleagues.
Yeah, because you're looking at doing lots more exciting things, aren't you?
I've got a lot of plans for next year. We've got we're going to have a new studio and a whole range of different things happening next year. But we do still need the show to grow for us to be able to put all that on, because building the studio it takes a lot of time.
Also, make sure that you put this show into your calendar so that you're back online next Tuesday at 7 p.m. If you cannot be with us live next week, we're going to miss you. We're always happy to receive your questions, though, so send them in to info@Wealth Within and just type Wealth Within Live in the subject line.
Now, that does bring us to the end of the show. And as I said before, we do hope you've enjoyed it as much as we have. I always enjoy sparring with Janine on these live shows. So
He's going to get a shock one day when I do bring in those pink boxing
I know, you'll
ones.
bring him in, you'll smack me over the head. So from that, but we'll see you again next Tuesday night at 7 p.m. But for now, goodbye, good luck, and good trading.
Good night, everyone.